Bank of England destroys silver from across the pond. Their surprise rate cut, their stubborn inflation, their cautious stance on future moves, all of this has tilted sentiment, it's changed global capital flows, it's pushed metals like silver into the spotlight. Check this out. Oh, if you're interested in silver, click that link in the description. Money Metals is holding this contest. They're giving away 20 Silver Eagles. Every month they hold this contest. It's free. It's fun. Click that link. Take home that silver. Now, look at this. This is from apnews.com. The headline move was clear. The Bank of England cut its main rate from 4.25% to 4%. That's a level we have not seen in over 2 years, and they did it on a razor-thin 5-4 vote. This marks their fifth cut since 2024. It's showing they're serious about loosening monetary policy. Here's where this comes at silver, because lower rates make those traditional interest-bearing assets less attractive, and they make metals like silver, metals like gold, metals like platinum far more appealing. It shifts the risk-reward equation. We see this constantly. It pulls investors toward hard assets, and it sets up silver for stronger demand from institutions, stronger demand from hedge funds, from everyday investors like you and I, and liquidity flows out of bonds and into those tangible stores of value. Look at this from Reuters. Here's where it gets interesting. The Bank of England didn't cut rates because inflation has been tamed. It has not. In fact, headline inflation in the UK has been stubborn, it's been sticky, and it's still above target. Energy costs, wage growth, imported goods prices are all contributing, and the central bank knows that cutting rates, if they do it too aggressively, it could reignite that inflationary pressure that we're seeing here in the States. For silver, it's a double-edged sword, but it's double-edged in a good way. Inflation erodes the purchasing power of that fiat currency. It pushes investors toward inflation hedges, and it fuels demand for commodities. Silver isn't just a hedge. It's a new era for silver. It's the industrial era for this metal. And that means it could benefit from both inflationary fears and all of this economic expansion. That uncertainty often drives this metal higher. Look at this also from Reuters. They're showing that despite the cut, Bank of England Governor Andrew Bailey made it clear they're not promising a rapid-fire series of reductions. They're not. The vote was close. The decision was cautious. And the bank is watching the data. They're watching the markets. They're watching the political climate. For silver, that means we're likely in a sweet spot. Rates are trending lower. Inflation is still present. And the economic backdrop is uncertain. It's uncertain enough to keep demand for safe haven assets high. That's exactly what we're seeing here in the States. And the UK is just one player. But when a major economy loosens policy like that, it adds to the global liquidity wave. Metals tend to ride that wave higher and faster and stronger. It's also worth noting that the Bank of England's actions can influence, of course, other central banks. If the European Central Bank or the Federal Reserve sees room to follow, the liquidity effect on silver could be amplified, it could be extended, it could be intensified. Here's the big picture. A lower UK rate makes silver more attractive. Persistent inflation gives it a tailwind. And the Bank of England didn't just make a domestic move. They added another piece to a global puzzle that's tilting in silver's favor. With this backdrop we're seeing, lower rates, persistent inflation, and cautious central banks, it's the kind of environment where silver has historically shined. Well, get your own silver. Click that link in the description. Thank you, Money Metals Exchange, for sponsoring this channel. It's a great contest. Every month they're giving away 20 Silver Eagles, 20 Eagles every month. Click that link, be the next winner on the list, and I'll see you on the next one.